Okay, traders, as promised, we got our likes on today's video, so we're going to be going into some horror stories tonight. Now, was that music creepy or what? If you guys can hear me, make some noise. Let me know in the comments below. So we got a lot of horror stories to get into, maybe personal ones that I've witnessed, but in addition to that, a lot of other ones out there too. I want to hear from you guys some horror stories as well from trading. Now, I'm not trying to scare anybody off from trading, but I like to bring trading to reality, because a lot of traders come into the market and they're like, oh, I'm going to get rich quick. I'm going to get that Lambo, going to go all in on Bitcoin, on this or that, and then they just blow it all up. Or, like me, this is my personal experience. This was 2016. I remember the first trade I ever took, MGT, which, much like many of the tickers out there, is no longer a company. Or went OTC, that kind of a thing. It was MGT. I remember trading it on the long side. Now, for some reason, 2016, how old was I? I was like 21 or 2. So my math was just not great at that time. For some reason, I could not compute 100 shares on 10 cents. That equated to $10. And commissions at the time were $10 each way. $10 each way, that means I spent $20 on that trade to make $10. Can you guys believe that? Do I sound old? $20 just to make one trade? Not good. Then we got today where you have all these commission-free brokers. Now, when COVID happened, everybody was trading, and all these brokers were competing with each other for everybody's business. And so that's why we went to commission-free. But during that time, before the COVID, I was paying $10, everybody, $10 per trade, $20 round trip. That was with Thinkorswim. I started with Thinkorswim back in 2016, and that's why it's so hard for me to get off of it. Paid product placement, by the way, Mr. Bowman Brothers. So I missed the Friday night live streams. We used to do these a lot. I'm going to try to do these weekly as well. We're going to be doing the live trading every single day, and then Friday night live streams we're going to review our trades and then help each other out, iron sharpen iron kind of thing. So $20 round trip. Yeah, now with CPRO, now, for 3 months I don't have any commissions, ECN, commissions at all, platform's free. But it's so hard for me to get off of Thinkorswim because I used that 10 years ago, and I'm still using that today. But horror stories. I want to hear you guys, your horror stories. I'll go over mine real quick, and then we're going to get into some other traders' horror stories. Much of my horror stories actually come from not letting my winners run. Those are where most of the horror stories come from. But I have been in a trade on the. I've been long on something that came out with a secondary offering. That's not so fun. Now my trading style, I stick more with shorting, but back then I was more longing, trying to long those momentum plays like a lot of the gurus teach out there. And so what they teach is to buy the breakouts, right? And so this is where all horror stories begin. It unifies us. Buying the breakouts. I hate it so much. All the gurus out there, they say, oh, what stock is pumping on up? Because today was Friday, right? So a lot of the gurus out there are saying, oh, there's no volume out here today. There's nothing to trade because there's not a lot of attention on these low float pump and dumps. So what they will say is, on the breakout, buy this ticker, go all in. And then my experience with buying breakouts was I'd buy the breakout and it would turn into a fake out breakout, right? You guys know all about that. We all do. When we first everybody starts their journey off the same. They buy these breakouts that end up turning into fake out breakouts. Everybody starts their journey. I've never heard anybody that's like, oh, I started managing my risk very early on trading mid caps. Nobody does that. Everybody gets lured into those low float momentum stocks. $1 million in the float. Let's go all in and try to make all our money today. So all of our horror stories essentially start out the same. That's what I'll say there. Mine started out that way as well. I'd buy something. This is what amateurs do, by the way. Hear me out. Amateurs, they focus all on the money. They don't focus risk at all. So that's where I started day one. I focus money. Buy the breakouts. You will get money. Breakouts equal money. That was my experience, right? So I'd buy these breakouts not even thinking, where's my risk at? Am I predefining risk at all? Professionals, they predefine the risk before they enter the trade. They know where they're getting in or they're getting out before they actually even get into the ticker. You guys let me know if you're there. Making sure the live chat's working. So that was my experience. I did not think about the risk at all. I'd be getting in, and then immediately the stock would tank or it'd be a fake out breakout. It would go. We'd see this huge, it's called a liquidity sweep. So what happens is, let's just say you're buying a stock, it's already up $1 or $2. Oh, it's got phase 3 trials, a pharmaceutical company, and phase 3 is the best, right? You get so sucked into the fundamentals when fundamentals are fundamentals. So phase 1 asks the question, is the drug safe? 2, is it effective? And phase 3 asks, is it better than what's already on the market? So when the phase 3 would come out, it's like, okay, I am tunneled on this ticker going to the moon, right? Because it should be, right? This ticker is going to go to the moon. We're going to have that breakout over $2. It's already up 100%. You didn't consider that. You don't bother looking left of the chart to see actually what else historically is going on with this ticker. And so you buy the breakout and you get that liquidity sweep, and you have all these shorts that are now coming in and longs that are actually cashing out. That makes sense. So if a stock is up from $1 to $2, there's going to be longs that are looking. Trading is all psychology. It's all mental. Like this morning we talked about Mr. Warren Buffett. What do he say? Consistency starts up here. It doesn't start in your trading. The trading's a byproduct of what's going on up here. And you got to understand the psychology is everything. What are other traders doing and why are they doing it? So some of my horror stories. I was long in some tickers that in pre-market. I have so many rules. I really need to make a video on this. I have so many rules now that I don't even go over. Like, for instance, I don't trade pre-market after hours. It's so illiquid, and I've been burned more times than not. So pre-market, I've been long when, and pre-market is when stocks love to come out with secondary offerings. They don't do it when the market's liquid. They do it when it's illiquid. So they come out with these secondary offerings when I'm long in it in pre-market, and it tanks all the way down. Come on down, Mr. Bob Barker would say. Those are probably my biggest losses. One loss that definitely stands out the most, I lost $1,000 on this ticker. So I started with Thinkorswim. I went from 1,000 to 5,000, transferred over to CMEG, and then with no guardrails, I went crazy. And So that's why right now I'm trying to stay so disciplined. When you're on tilt, you got to realize discipline's got to be strong. Mr. Hawthorne, good evening from Lakeland, Florida. Nice to have you, man. Thank you for saying something. Good to have you, Kevin. Another Kevin in the house. Yeah, everybody else, shout out. Where are you at? And tell me some horror stories. I love these. This is going to be fun. We're going to keep this up. Where was I going with that? So, I don't trade pre-market after hours because of how illiquid it is. And looking at my historical data from my trades, it doesn't work out very well trading at that time frame. And so now what time frame do I trade in? Well, it's mainly just I try to plan the trade and trade the plan the trade the plan. Meaning, do your homework, figure out exactly what you're going to trade, know your risk before you enter the trade, make sure it's your edge, your setup, and you just click the button. That's all you're doing at that point, right? Is clicking the button. Random trading equals random results. Hey, write that down if you guys are taking notes. I've seen that so much, guys. With traders, just they trade, they get on tilt, they take a loss, an L, but a loss is not really. You got to consider a loss in a different way. With the process-oriented and results-oriented trading, I go over this all the time. Results-oriented says, oh, I had a loss, so that's I had a red trade, so that I consider that a loss. When it should not be considered a loss, it should be considered a winner, right? Because you stuck to your rules, you adhered to your trading plan. That should be a winner. But what? We consider an L because it's a red trade, understanding that we are all going to experience red trades. Really, how you handle red trades is really going to define your trading career. It really will. The best offense is defense when it comes to trading, just because of that. And I know that's for myself and my own personal trading journey. So that $1,000 loss I had, what was it? NCLH. How did that just come to me? NCLH. Let me see if that ticker is even a thing right now. So the ticker had a really nice pattern in pre-market that I traded, and I was just absolutely convinced. No, it wasn't NCLH. It was close to that. I was convinced this ticker was going to break out. So it had an inverse head and shoulders pattern, this ticker that I was watching. Inverse head and shoulders pattern, and what is that? It's a bullish pattern, right? It's just the opposite of the head and shoulders, which is bearish. You have the shoulders and the head, but it's a bullish pattern. But the stock was already up so much. It had great news. I was just suckered in. Absolutely suckered into like the news and the technicals and all this. You gotta understand that those don't mean as much as you guys think they do. Maybe not you guys, but I'm speaking to you as if I was you like 5 years ago. Because myself, I would think, okay, nobody knows about this head and shoulders except me. I'm the only one that sees it. When everybody sees it, the whole market sees it, all other traders see it, algorithms see it, everybody sees it. They see the news. You're not special in that. And these patterns don't work out 1,000% of the time, like I just went over with breakouts. Maybe you have a double top, triple top, and then the third test, you get the break, but then it's a fake out breakout, and you're like, oh, you're so convicted and convinced that this is going to work out, and it ultimately doesn't, and you didn't have a plan otherwise. It had to work out in your mind. So yeah, I lost way more. That was at a time when I didn't have like a max risk or max stop, obviously, on the account. I kind of went all in on that inverse head and shoulders. Was looking to get rich quick. Wasn't looking to predefine risk or manage the trade at all. And that's what happens when you don't manage your trades. So, this is a job. If you're getting into this, it's a job. That was my horror story. That was that, and then the secondary offerings, for sure. Getting involved with those. I've always wanted to be involved in a secondary offering. It's a dream of mine, bucket list. Hope it comes true one day. But I don't trade. I don't hold stocks overnight. That's another thing. Again, hey guys, we're gonna make a video on just my trading rules. I need to come out with that because it's very important. Like holding stocks overnight. Oh my God, I wouldn't get any sleep. As many times as I've seen tickers just be manipulated so much by traders or by news, I don't think I could sleep at night. And then the secondary offerings always being in pre-market. That'd be terrible. So I will say GME was actually fairly good to me. That was the last ticker I was probably holding overnight. I took a very small short on GME, 10 shares. I got at $250 is where that stock was at. I got them. This is the most I've made like per share. I covered that under 100. I made over $150 per share. Obviously, only 10 shares. I made $600 on that trade. But that I was going for that trade just for like, what's the most amount of dollars I can make per share? So that was really interesting. And obviously, that could have gone sideways real quick. And GME actually right now is still a thing. So I went into ChatGPT and asked it, what are some horror stories, and just to see what ChatGPT would say. And number one, the $9 million mistake. A day trader once accidentally placed an order for 100,000 shares. Okay, they fat fingered this. Instead of 1,000 shares due to a typo, the stock plummeted just moments after the trade, and within minutes, they were facing $1 million loss. So you're saying, what? Yeah, I was too. Let me, here it is. Okay, the oil trader owes $9 million after starting the day with 77,000. Now, typically you would think you only really could lose more than you invest on the short side. And that's what I really thought too. But apparently in the futures market, crude oil can actually go negative. It can go below $0. So this person wasn't aware of that either. And so what had happened was oil's first plunge into the negative pricing had broken the Interactive Brokers platform. So Interactive Brokers, their software couldn't even cope with the crude oil going negative. So it's been technically possible for it to, but they didn't even account for that. So this guy that he traded $77,000. He longed something and ended up in that same day going negative $9 million. This was during COVID. It turned out to be 116 times that number. I was in shock, the 30-year-old told Bloomberg in a phone interview. I felt like everything was going to be taken from me, all my assets. And he was not alone. Countless investors, especially retail day traders on Robinhood, who had followed every tick lower in the USO by buying more of the ETF in hopes of a rebound, had a brutal day on April 20th. This was during 2020. Again, lots of people trading during COVID. Lots of people stopped trading during COVID. This being one of them. So it looks like Interactive Brokers actually they took the brunt of this, and anything under zero looks like they paid him back. But man, still losing $77,000, and he was down $9 million. So the stories actually even get worse than that, and this is actually quite sad. So there was a 20-year-old Robinhood customer dies by suicide after seeing a $730,000 negative balance. This was during COVID as well, 2020. The note found on his computer by his parents on June 12th, 2020 asked a simple question. How is a 20-year-old with no income able to get assigned almost $1 million worth of leverage? Now, this was a software glitch on Robinhood's part as well, I believe. We're going to look into it. But I know a lot of you aren't too happy with Robinhood because I remember during COVID and they restricted anybody from trading GME, and it ticked a lot of people off. It felt like they were manipulating the market. That was a whole thing back then. So, like so many others, they took up stock investing during the pandemic. While his account had a negative $730,000 cash balance displayed in red, it may not have represented uncollateralized indebtedness at all, but rather his temporary balance until the stocks underlying his assigned options actually settled in his account. RIP. Extremely sad story. Let's get on to another sad story. He thought day trading would be a thrill. He ended up losing $127,000. Is this the guy that went to the meeting? He was short something. Oh my goodness. The guy who started a GoFundMe. This may be it. Okay, let's look into it. YouTube is filled with videos promising to teach you how to make big bucks trading stocks. All right. This is not investment advice, guys. My lawyer messaged me and said, he told me to say this, so I'm just going to throw this out there. My results are not typical. Which means you should make money in the stock market. We're sitting a little red on the account right now. We're going to get it back next week. So, real estate agent and amateur investor Matthew, who prefers his last name not be used, made thousands of dollars trading stocks over the years, only to lose most of it in day trading. Guys, while I'm reading this and while we're going over some horror stories, write yours down in the chat. So we're going to be talking about all of them. I've already gone over some of mine. We're going to be going over yours as well. And your successes. We'll do both. Your worst trade and your best trade. Let us know. So now in his YouTube videos, he cautions others about the perils of day trading. It destroyed my whole account, draining it from $150,000 balance down to $50,000, then $40,000. Basically, I lost everything. This was during the pandemic as well. Wow, a lot of stories during the pandemic. Okay, you guys got to hear about the one with the guy short and went to a meeting. I have that one pulled up somewhere. Oh, yeah, here it is. All right. KBIO, which I remember this ticker. It was a low float ticker. And why were you short on this at $2? Hindsight's 2020. I ain't going to beat up on them too much. But come on, KBIO. I remember that ticker years ago. It's a low float ticker. Why on God's green earth would you ever be short on something at $2? I mean, if it gets pumped, that's one thing. Okay, then get short. But you're short on it, and there's absolutely zero demand. All right, so this story resonated with me because shorts can lose more than they invest, let's say. You guys are aware of that. If you go long on something, you only lose what you invest. So unless it's crude oil, which we just went over that story with the futures market where the guy owed $9 million. So with this story, the guy was short. And he went to a meeting. And when he came out of the meeting, he had a buddy actually text him and say, "Hey, are you still in XKBIO?" And he said, Yeah, I am. It's working out good. Great, actually. And this is what happened. So when you're going short, and let's say you short something and you're in with a total investment $10,000, you can obviously lose up to $100,000 if the stock does a GME. If you get in at 100 shares at $10 and it goes up to $100, you guys do the math on that. You owe a lot of money to your brokerage. All right, so I owe E-Trade $106,445. I don't clip that. His name is Joe Campbell, and he claims he went to bed on Wednesday evening with some $37,000 in his trading account at E-Trade. One notable development on the pharma front later, and Campbell woke up to a debt. Again, this is why I do not hold positions overnight. You never know what's going to happen. You can't manage those trades at all. For one, you can't manage them. It's so illiquid, but you don't know what the company's going to do or if they have a PR coming out. You don't know that at all. So you can end up getting fried. So he may end up liquidating his 401k and his wife's. So that's where you come in. Well, at least where he desperately hopes you come in. Sympathy in the trading community over such gaffes is typically in short supply. So he started a GoFundMe to help raise this $100,000. He was holding KBIO short overnight for what I thought was a nice $2 fade coming in. He wrote, "At the close of the bell, I saw the quote montage clear and figured today there was no action after hours in the stock. So he went to his office for a long meeting. I got out of the meeting and saw a message from one of my buddies. He asked if I was okay. I'm short KBIO, this low float ticker at $2 for a nice fade, and now it's up to like $20. Am I okay?" Far from it. The stock had exploded, running up about 800% at one point in late trading after the company, that CEO, gained control of the majority of the shares. They announced last week that it was winding down operations because it was running out of cash while developing 2 potential cancer drugs. So many companies developing cancer drugs. If you don't want to donate, I understand. At least read my story of what happened today and protect yourself from the same happening to you. Trust me, we're all protecting ourselves after reading this. This is one of the reasons I'm enlightening you guys to these stories, is because you really never know what could happen. You gotta trade like that. You gotta trade so tight on your risk, because you never know what could happen. All right, next story. I just lost $20,000, a cautionary tale. Before we get into it, write down in the live chat, best trade, worst trade. Let's go over it. Oh, and I will share with you guys Merc. I've been in nearly every chat room out there, and I've seen some things. So, I'll share with you guys the biggest loss I've ever witnessed. It was awful. I feel bad even bringing it up. To this day, I remember it. I mean, it was just unbelievable. So I was in this chat room from this guru who's very well known. I'm not going to mention his name. Yeah, you guys can probably guess it. I've been in most chat rooms, so you got the homework. You figure it out. It was a low float ticker, and it was halted up. And the guru was saying, when this thing gets out of the halt, essentially let the whole chat room, let's buy this thing on up, and it's going to get halted again on the upside. That's essentially what he was saying without saying it. And this lady bought into this ticker with over leveraging herself with her margin account. The stock halts up, and when it opens up, it opened up. The stock halted at, let's say, $20. It opened up at around like 10, and she lost like $20,000. And I remember her putting in chat, and this was probably 7 or 8 years ago. but it's just so vivid because I felt the emotions of it. She put in the chat, wow, my kids are not even going to get Christmas this year. And that was the last I ever heard of her. One trade can take you out, guys. One trade can take you out. And that's why I never teach low floats. I never do the low floats. It's for the gurus and chat rooms out there to pump them up and blow up accounts and make it big or lose it big. It's not manageable. And I've seen too many stories like that. I've bought too many breakouts myself that turned into fake out breakouts. Not my thing. Whew, man. Seems like yesterday. All right, let's get into the next horror story. I just lost $20,000. A cautionary tale. Well, we just went over it with somebody that lost $20,000. I do data-driven short-term trading via a homegrown system. I got burned by my broker's behavior I hadn't known was possible. So last month, my system told me to short INNT. I remember that ticker. From June to July. I opened a short position. This many shares. It saw a massive spike not long after I opened the position, presumably triggered by it getting added to the Russell 3000, 2000 microcap indexes. Not great news, but I didn't panic. On July 11th, I got a surprise. My brokerage had forcibly closed out my position, buying back the shares at a cost of about $35,000. So this is an example of somebody who the broker actually needed their shares back. And they literally just took them back without telling them. I don't know which broker this is. That seems extremely criminal to do that. Presumably, other clients had sold their INNT shares, and the brokers now didn't have enough shares for me to continue shorting. So they forced a buy-in, took those shares back, resulting in a loss of $20,000. Now, he goes on to say that this actually would have been a profitable trade. But in this situation, he actually lost the money because the broker taken those shares back. Awful. Now, that seemed like a rare situation. I mean, there has been some very sketchy things that brokers do, right? Like the Robinhood stuff, restricting you from buying and selling certain tickers. That stuff's sketchy. And then this sounds real sketchy too. I haven't had so my only experiences with like sketchiness in the broker world have been like there's been delays. The level 2's been real jacked up, delayed, or like Thinkorswim won't open up. DOS will be slow. But really, it's really rare to see something like this where a broker is just going to be like, oh, I'm closing you out because we need these shares. That seems pretty rare. All right, traders, I want to hear your horror stories. Put them in the comments below. We've just gone over the $9 million mistake. We have not gone over the Knight Capital disaster in 2012. An algorithm. So this is a major trading firm. They lost $440 million in 30 minutes due to a software glitch in their trading algorithm where they essentially bought up I think it was like $400 million worth of stocks right at the market open. So an error that caused erratic orders that distorted the market and led to massive losses. So this is the case study on that. So American global financial service firm engaging in market making, electronic execution, and institutional sales and trading. So in 2012, they were the largest trading, blah, 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 blah. All right. What happened to them in 2012 is every CEO's nightmare. Speaking of CEO's nightmare, did you guys see where today Party City, literally, they just said, effective today, they were closing 850 stores. Essentially, everybody's fired today. And I know Big Lots is doing the same thing. We are in a time of huge inflation and like consumer spending is at an all-time low. And so where does this head from here? Are we going to see another depression like we've never seen before. The world may never know unless we lick our way to the center of the lollipop. Every CEO's nightmare, simple human error, easily spotted with hindsight but nearly impossible to predict in advance, threatened to end the firm. Their new trading software contained a flaw that became apparent only after the software was activated. When the New York Stock Exchange opened that day, the errant software sent Knight on a buying spree. They went on a buying spree, snapping up 150 different stocks at a total cost of around $7 billion, all in the first hour of trading. Under stock exchange rules, Knight would have been required to pay for those shares 3 days later. However, there was no way they could pay since the trades were unintentional and had no source of funds behind them. The only alternative were to try to have the trades canceled, but they couldn't even cancel them. The SEC wouldn't allow that because after the flash crash in May of 2010, the SEC now essentially governs when trades should be canceled. So the trade stood. This was very bad news for Knight, but was only fair to his trading partners who sold the shares to Knight's computers in good faith. Knight's trades were not like those of the flash crash when stocks of some of the largest companies suddenly began trading for as little as a penny and no buyer could credibly claim the transaction price reflected in the current market value. So once it was clear that the trades would stand, Knight had no choice but to sell off the stocks it had bought. So that was a huge $440 million blow that they had to absorb. Trading off of that trading algorithm mistake. Wow. That's awful. So I got a trading algorithm as well, but it's got, it shuts down after a certain amount of losses. It sounds like they need something like that going on for them. Yeah, that's a huge loss. Okay, so we've gone over that. We've gone over the $9 million mistake, Knight Capital disaster. Obviously, there was the meme stock mayhem during the 2021 GameStop short squeeze. There were so many Redditors turning $250,000 into $40,000 in hours. Hidden fee catastrophe. I mean, that's not really... those that are scalpers, they get eaten up with these fees. That's not really a hidden kind of thing. I mean, that's right in your face. Come on, ChatGPT. We went over the Robinhood margin misunderstanding and obviously revenge trading spiral. We all experienced that. And I know that firsthand very, very, very well. Revenge trading. So a trader once lost, they're acting like this is a rarity. A trader once lost $10,000 in one session, decided to chase their losses by doubling down on riskier trades. They ended up losing their entire account within hours. Come on. This is like an everyday occurrence. This is easy. I mean, this is partly why the SEC has the PDT rule in place in the U.S., but obviously we want them out of our lives, not governing our trading, hence we go offshore. But I did have a lot of success under the PDT. It forced me to make very good trades. Obviously, I like everybody else, I don't want to be under the PDT. But it does force you, when you're starting out, to make good trades and to focus on the best setups. And that's ultimately what I did. One of the problems with it is you feel like when you're on so you got to kind of go to a cash account with they just introduced the T+1, so trading session +1. So essentially, if you trade with cash, let's say you got a $5,000 account, you trade $5,000 today, you get it back tomorrow. So with that, that's honestly better than the margin account with the 3 trading days within a 5 rolling day period. what a lot of traders struggle with, myself included under the PDT, is you feel like you have to let your winners work longer than necessary. So you can't just take like profit off the table. Now I believe, which it's been a long time since I was trading in under the PDT, but I believe you can like scale out until you close your full position. It doesn't count as like one full day trade. You correct me if I'm wrong. And I do love like taking partials and letting leftovers work for me, because that's my biggest flaw is letting winners work for me. But that's what a lot of traders struggle with. It'll be when they're on the under the PDT. It's like I cannot take the profits on this trade because it's my one trade of the week. You know, I have 2 more left, so I can't take $20 on this. I gotta let it work for me, and that's what they'll end up doing. They'll just let it work, and then it goes the opposite direction. They end up losing money. They won't, rather than taking any profit at all. You ultimately end up taking a loss because of the restrictions of being under the PDT rule. Revenge trading. I know so much about that. Yeah, it's hard. I mean, revenge trading is challenging not to. We have ultimately built within all of us, I believe, instinctually, we have this nature that wants us to, if we experience defeat, we want to pick ourselves up by the bootstraps and face that defeat head on, to ultimately conquer it. And that's what we do in trading, but it doesn't work in our favor. A lot of what happens in the stock market is against human nature. We don't want to do what our natural, instinctual human nature tells us to do. When something's going up and we experience that fear of missing out, we ultimately don't want to get involved with that on the long side. You want to do the opposite nearly of that when something's experiencing. I think I have a chart here, actually. All right, here's a chart. When something is buying up, and you have the excitement and the thrill and the euphoria, the extreme intensity, we experience naturally the fear of missing out and want to get into it. But what we should do is the opposite. We should short sell into the euphoria and cover into the capitulation. It's the opposite of human nature. So our nature is really one of our biggest flaws, I guess you could say, or facing it. I say there's three. I always say there's 3 different types of. There's 3 enemies in the market. It's the market, other day traders, obviously the algorithms, market makers. They always see our orders, don't they? They always see our orders. I put a stop order out there. It's like it always gravitates right to it. And ourselves. Ourselves are the biggest ones. Because it's all up here. It's all up here. As Mr. Buffett said, consistency starts here. What's on the computer, on your trading platform, is a byproduct of the consistency that's up in your head. That's important to remember. And revenge trading, like we were just going over, I've done it plenty of times. You try to dig yourself out of a hole, and what happens is you dig yourself deeper into the hole. And what you need to do is take that shovel and throw it. Throw it at somebody. Throw it at the trader next to you. You need to get rid of that shovel. Because the revenge trading, once you go offshore, I learned a lot under PDT. I learned a lot offshore. And the reason why a lot of traders do not even want to trade at all, or they quit, is because you come face to face with your own nature and you realize you don't like yourself as much as you thought you did. You have to be so humble in trading because you're face to face with your negative attributes, right? The fact that you don't even listen to yourself, you can't stick to your trading rules, you're not adhering to your trading plan, you're adjusting your risk parameters mid-trade. I mean, you come face to face with all your flaws in trading. That's why a lot of traders get out. I mean, a lot of people just stop trading. I mean, it's not easy. Mr. Mike, thank you for chatting, Mr. Mike. Grew a $680 small account to $10,000 in 1 month. Was having a bad day and traded anyways and blew up my account in 1 day on TIRX on April 13th, 2021 by breaking my rules. The right mindset is very crucial. I wonder if TIRX is even a ticker anymore. Let's pull that up. Mike. All right. I got you, Mike. Trading these huge upper shadow low. This has got to be one of them low floaters. Look at how this thing moves. 2021. I can't. Let me see if I can go that far back. Let's go 10 years. 2021. Whoa! Okay, this one did a reverse split, so we can't really get a good idea what's going on here. Okay, so yeah, TIRX. Look at this huge red candle. Yeah, that was the irrational can happen. It certainly can. I've had the same experiences though. I mean, we all have nearly, of being consistent and then allowing one trade to define us. That's the aggravating part. Is like, man, you did so well, Mike. You grew that account. Like, you have the capacity to grow an account. That's the important part that a lot of people don't realize is, like, does Mike have the capacity to grow this account? It's not, can you make $10,000 in one trade? But are you skilled enough and have the capacity to grow this account consistently? Because that's what's going to be sustainable. We want sustainability in trading. Like, we're not interested, at least I'm not, and you're not either, in getting rich like off of one trade. I want to be a successful trader that's going to be sustainable. And you did that successfully in your small account for that month. And you allowed that one trade. Well, at least you said in that one day. I don't know if you revenged other tickers, but in that one day to define you. Because probably, what would you say? Ego got in the way? Or you were doing so well that you were feeling like Superman. That's what I call it. Because that's the same thing that happened to me. I would grow an account really well, and then I'd start feeling like Superman, essentially saying, you can't take a loss. You don't even know what loss feels like. If you get into something, it's going to work out ultimately. So, keep with it, stick with it, and don't predefine your risk. So I got you. I mean, if you want to elaborate on that, sure. And any other traders in here that want to share their experiences. But we've all, like we all know what that feels like. Trading, the community is so tight because of this. I mean, you say that, and it's like, I've been there. We all have. It sucks so much, and you feel like so defeated by that one day. But God, why did it have to come down to the one day? Like that's what you boil it down to. Like, why should one trade do that to us? It's ultimately because we're coming like face to face with our like flawed nature and like why we have to resist that. So much of trading is like it's just against our nature. It's against what we naturally want to do. But yeah, if you want to elaborate on that, that is, or anybody else want to comment in the live chat, I've gone over the horror stories I wanted to go over. There's plenty of them. We're going to be keeping up with the... I'm going to try to keep up with the Friday night live streams. This is fun. If you weren't in here for the entirety of it, go back and watch it. We just had a lot of fun going over horror stories. And share your own if you would like to. But trading is like... it's a scarcity loop. So, you have to... Let me throw this out there. I'll throw this in for free. You guys know as well as I do, you know, when you're into trading, there's people who say, oh, you're just a gambler, right? Well, then what are you? You know, like, we all gamble. Like, you gambled a tuition for a degree. You gambled your time for money. Everyone's a gambler, right? You gamble... Everyone gambles everything. I consider it more gambly to be working a 40-hour job because you're gambling your life away. I would much rather, not gamble my time, but gamble something that I'm, actually a dream, a pursuit, something like that versus just gambling my time away. We're all gambling something, right? And so the scarcity loop suggests in trading, there's 3 different conditions to the scarcity loop. One, there's opportunity. And what is this loop, by the way? It goes... I'm speaking on it because it's how traders and everyone in life, they say, oh, trading's gambling, that kind of thing. Everybody's gambling. How are they gambling? Well, you're gambling when you're scrolling on social media. It's the scarcity loop works for all this. You're gambling when you're scrolling on dating apps. You're gambling when you're spinning the wheel in the casino. You're gambling your life when you walk out the door to go to work. You're gambling your time away. You're gambling your tuition for a degree that's ultimately may or may not work out these days, right? Because trade schools seem to be the thing these days. So everybody's a gambler. Don't say I'm a gambler because I'm a day trader. You're gambling your life away too. So the scarcity loop is 3 things. It's the opportunity to present itself. So in the stock trading world, we have opportunity that faces every single day. Charts, they come up and we have opportunity. We're looking for a few different variables like volume, because volume equals range. The range is kind of where the money's made. You can make money when stocks go up or down, but not sideways, not flatlining. So you have the opportunity, you have the random results, and the quick repeatability. This is the scarcity loop. It works across the board on all the different things I just mentioned. Think about it. Quick repeatability, the opportunity, and the random results. So everything in life is somewhat like that. It has that loop of scarcity. We all have to learn how to master it and not let it master us and enslave us to the way that it's designed to enslave you. But with that, traders, we've been going for an hour. I had fun. If you had fun, let me know. If you want us to go over anything else, throw in the live chat. Something else. Horror stories. Your horror story in trading or your success story. Let's go over all of it. We've already gone over everything over the last hour. Had a ton of fun. Let us know if you want us to go over it before we call it quits on this Friday night. Well, Mike, thank you for being vulnerable and sharing this. Because it's not easy. Trust me, I know. It's not easy because I'm literally editing these videos for an hour on my losses just to show you guys every single day. So 7 trades on that ticker. You started with a $2,800 loss, which I haven't read any more than that right now. But because I've traded thousands of trades, I could not read the rest of it and know exactly where it's going. Let me try to do that. So you should have stopped there. You dug a hole, and you shouldn't have dug any deeper. Let's keep reading. Exceeded the max loss and still went back at it. Yeah, okay. There we go. Exceeded the max loss, went back at it, losing another 1,000, another 1,000, 2,000, 1,700. You were tilted. Completely tilted. And you're not alone in that. But now you know you're not going to do that again. For one, you can put a max loss on the account so the broker will just shut it down after, a $500 loss. Just let them know. Because we can't trust ourselves. I mean, I'm doing like a proof of concept with this small account right now because I really want to trust myself. I'm just not so naive into thinking that I can trust myself. That sounds kind of odd. Yeah. In trading, at least. Let's put it that way. In trading, it's very difficult to trust yourself after you've let yourself down over and over and over again. So you had 7 trades on the ticker. You started with a loss that was max loss, but you kept going back at it, digging yourself into a hole deeper and deeper and deeper and deeper until you were blown. I do remember my first $1,000 winner, which was AC. Yeah, I remember that day too. It was like I like I said, the Superman analogy. I felt like I couldn't lose. Literally every single time I touched a ticker, it was a winner. It was $1,000 day. It wasn't one trade. It was like, I don't know, maybe 10. And it's just in the one day, every time I took a trade on it, it was just like $50 to $100, $50 to $100, $50 to $100 every time I got into a trade. So I know I'm very aware that can happen. And like I said at the beginning of the stream, some of my horror stories come from. I hate even talking about these. I mean, some of these swings that I had in mind in 2020 worked out so well. It's like I don't experience FOMO as much on the momentum low float plays. I experience it in hindsight when I look back and I'm like, oh, I was interested in these cruise line tickers back during COVID because all the cruise ships were shut down and these stocks tanked. And look at them today. And I was in some of these, and I got stopped out of NCLH. I know I got stopped out of this one. I don't remember exactly where, but it was like in this range, between $11, $12, or $13 back here. I was in it. I was averaging down on a swing from like $15 to $14 to $13, and it was getting real... not looking great, when you're starting like the 15 area here. It wasn't looking great, and I ultimately got stopped out, and then here we are at 26, so I get stopped out like $11. That kind of stuff. When I see a nice swing and I don't size in properly, it's painful. On swings, I don't mind like size it into losers slowly, steadily. On swing plays like that. But outside of that, I'm trying not to size into losers like we did today, which should have been a winner. It was a winner initially. But anyways, we're wrapping it up, guys. Anything left? Throw it down. Thank you, Mike, for sharing that. Yeah, it's an amazing feeling getting your first $1,000 winner. If not, traders, let's go wrap up the Friday night live stream, the horror night. We went an hour. I think it was a great hour. We did very well. Went over some real good stories, had some good lessons. Some traders are going to look back and watch, and I think they're going to learn something. If you had fun, want to keep seeing it, hit the like button. Hit the subscribe button. Traders, I don't know if I'm going to be here Monday, so the wife's working. I got to be with the kids. But there's a couple really nice setups I'm looking at. So we'll see how that goes. But outside of that, we will see ya in the next